Hey guys, welcome to another episode of Scriptures in Wall Street. I'm your host, Carlos Cortez. Man, I'm excited to be back in the cut, talking about all things matter, such as your Bitcoin, such as the markets, such as your retirement, such as taxation, such as 2025. And guess what? The president is coming back in town to the DC. Yes, so a lot's happening this week. By the time you hear this, it's already happening. So what to do, what are we going to talk about with your portfolio? How do you make your portfolio Trumpified? Like, how do you get it prepared for this new administration? Is the market going to go up, down, or sideways? What do you think, Carlos? Well, we're here to talk about today. We're talking about facts. We're talking about logistics. And more importantly, let's put our political biases away and just talk about the data. The data. And at the end of the day, Wall Street does not care about your Christian values. They don't care about your Republican or your Q sense of humor or your bias approach. They do not care. And so you have to start treating your money the same way. You have to protect yourselves from your own ideology. Everything about trading, everything about financial is honestly 60% mindset and psychology. The other 40% is about you and discipline, and the other 10% is about strategy. I mean, I'll repeat that. 60% mindset and psychology. The other 40% is about you and discipline, and the other 10% is about strategy. So today I just wanted to talk about, basic things. So we need to put our political beliefs aside. We need to put our religious beliefs just to the side a little bit. And just worry about our funds. Like, what is actually happening? Are we really vulnerable for a minute here? And so I wanted to talk about charts. But before I do, one thing that I do want to say is that, let me say my disclosure here. For those of you that are just tuning in for the first time, everything on this podcast is for education and information purposes only. I am a financial advisor, but this is not investment advice. If you would like investment advice, then reach our office, 813-448-3446. Again, 813-448-3446. You can also visit us online at cortezwm.com. We do have a book out, and all you got to do is request a consultation, a phone appointment. It only takes 15 minutes to have a conversation, make sure we're a right fit, make sure that you know what your risks are, and you know that you're doing the right strategies going into 2025. Let me tell you, by the way, for those of you that have the Edward Jones, Morgan Stanley, Fidelity, the UBS accounts, the mutual fund accounts, guys, you better watch yourself. I mean, seriously, you are in a pass and buy hold strategy where you just hang on to it and do nothing and hope for the best. You only make money 33% of the time, by the way, when the market goes up. Will it continue to go up? Well, the markets don't go up all the time. And just because Trump is getting in does not mean that the stock market is going to continue to rise. We do know there's going to be a knee-jerk reaction. There's going to be a massive knee-jerk reaction with the tariffs, with the de-inflation. Guys, I want you to understand that de-inflation is a real big thing. Let's just say you had a bakery and you had to buy yeast to make your bread, but the yeast cost $10 a bucket, right? Well, you spent $10 and you made a profit. If every time you sold your bread, you made you made 100 rolls from the $10 yeast. So yeah, let's just say you made $100 every time you baked. And what happens is that $10 now is in a deflationary period now becomes $5 a month from now. And from $5, it goes to, let's just say $4, and then $4 and $3. You're going to stop buying the $10 bucket when you bake. And what that's going to do is going to freeze up your cash flow as a business owner, where you have to cut hours to your employees. Your employees do not have money to go buy groceries. They do not have money to buy their own bread. So you as a business owner collapse. And this is a ripple effect in economy. And this is what the deflationary risk that is happening, that is going to happen once they start cooling off interest rates. Maybe Trump smashes the interest rates. Who knows? It's all speculative. But everybody's worried about high inflation and high this and high that. Guys, I'm worried about the de-inflation. This is what people are not understanding and not talking about. And this is just a mom pop bakery. What happens with the cell phones? What happened with the cars? What happened to the homes? What happened to consumer staples? For crying out loud, the cotton with Mike Lindell and pillows. I just had a conversation with him this week, and I told him about that, and he was just like flabbergasted. We had a show together the other day, and he was like, he couldn't believe the risk that could be. And this is not just affecting him, it's affecting everybody. So having this deflationary risk could be a huge problem for the economy. And so if we have tariffs, if we have basic, logistical chains, we've never repaired our logistics from the cutoff of the ramifications of this idiot person called Joe Stupid Biden. We never, ever fixed that issue of rising prices because we cut off the supply chain. We cut off the trucker. We cut off the ships. We cut off everything when we don't have diesel running in our economy. And for those of you that have been following the BRICS, I've said it with the road incentive map that they're building their own Panama Canal over there. The BRICS they're trying to connect China, Russia, India, South Africa, and they wanting to create all these bridges and tunnels so they can bypass all these countries and have their own economical kingdom over there. Well, Trump's going to put a squash on that. And it's very powerful to see what is going on just with the mention of him saying the dollar is going to be stronger than ever. The dollar is going to be the golden standard. I've said this since day one. The BRICS will not last. And you guys laughed at me. And I could care less about your feelings. To be honest, I'm here to protect your money. I'm here to grow your asset, to give you the best information, I would say. So here we are going into the charts. I want to look at BTC. I want to look at Bitcoin real quick, right from the jump. Make sure we're looking good. So what is nuts is that people are like, oh yeah, Trump's Bitcoin, he's going to improve everything, and this is going to go to 250,000. And look, I'm a fan of Bitcoin. I'm not going to say that it's not going to go to 250,000 in 2 more years. I really think it will go to $500,000 in less than 5 years. So I'm with it. But what I do want to say is that Bitcoin has its cycles, man. Bitcoin, like any other asset class, has its cycles, and you need to understand that when you're with these type of volatile assets, you are going to see massive swings. And because of these swings, we're having what we call a head and shoulders pattern. You see, here's the shoulders here, and a head. And right now, my software is saying buy right now, but I'm actually going to tell you that in my other software, it's showing a massive sell. So we could see 40 to 60% sell off here on BTC, on Bitcoin. And right now, it's not the time to buy Bitcoin. It is not the time to buy Bitcoin. It is right now going to be extremely volatile. As a matter of fact, for those of you that are actually wanting to buy Bitcoin, but you don't have the 100 grand to buy one coin, or you don't want to risk that much, one correlated stock, like an actual stock, and this is not a recommendation. This is just a information purposes only. There's a ticker MSTR, and this guy basically has the number one company that is buying Bitcoin as his business, and is traded right now, MSTR. For those of you, if you want the closest thing to Bitcoin without purchasing Bitcoin, and you just want to trade it like a stock, you can buy options on it, you can buy strategies on it, you can buy pretty much it like a stock. It is a stock. Then basically MicroStrategy Incorporated. And this guy literally is buying, he has a 500 I forgot what it was, 500 billion. I mean, it is nuts how much Bitcoin this company consumes. It's traded on a NASDAQ. Now, word of caution here, Bitcoin is highly, highly correlated with tech. So if you see tech coming down, Bitcoin is going to come down, and vice versa. It is 100% correlated. But this is just a massive, massive opportunity for a long, long position for somebody that wants the volatility, that wants to trade it. And look how this thing has been blowing up. It was September when I got my blue cross signal here at 138. This puppy is over 340, tapping at 350. Yes, so if BTC goes down, this is going to go down. If it goes up, it is going to go up. Let's take a look at Musk, Mr. Elon. I like a TSLL because this is a ×2 version. Now, I actually own this puppy as well. It took a hit as of recent, but it's starting to pump back up. So yeah, it was at 32, went to 27. It's a volatile gig, guys. This is a very volatile gig, but it's ×2 Tesla. And we got nothing but green traffic lights, green cloud. So we might see another AI push here. We are basically getting that Trump bump. We are in that Santa rally going to a Trump bump. It could be a massive pullback. I'm going to be covering this like crazy. So Tesla is a huge deal right now. I want to look at the S&P 500. As we know, we had Bank of America come out with some positive returns. I want to look at KRE here shortly. We've been talking about KRE for years now. And here we are. Here's the S&P 500. We're starting to see some red, some dying of momentum. The lasting momentums hasn't been there like they should been, but we do see some pullback here, and so it's time to be very, very cautious. For those of you that are just getting into the market right now, I would be very, very cautious, as we're probably going to be 50% in cash, 50% in equity. Or if you're one of my clients, we're probably going to be 50% in a fixed strategy and 50% in equity, because it is so volatile, guys. Like, you have to understand that you cannot just be in mutual funds here and say, oh, it's going to be all good, baby. We're going to be all good. All-time high, no problem. We'll invest our life savings in the market and hope that it goes well. Trump is going to grow the economy. Yeah, he will grow the economy, but there's going to be some scars. There's going to be some speed bumps and some corrections. And that is guaranteed to happen, my friend. And it will happen possibly in real estate. It could happen in other sectors in the stock market, and eventually it will show in the stock market or in a bond market, by the way. So KRE had some, obviously Bank of America had some very good news. So here we are, the woke banks. Bank of America, Morgan Stanley cement a Wall Street revival. They're calling it a Wall Street revival, guys. Like, this is crazy what they're saying.
Yeah, I think the last time we spoke to you, I was asked you, what sectors you want to be overweight. I think, Ed, it was technology,
yeah,
financials, industrials. Would you still want to be overweight those sectors here?
Yeah, absolutely. They're not cheap. They've already been in a great bull market, but their earnings outlook remains very strong. And so I think from here on, the bull market continues on earnings and less on valuation. And again, I think we got a glimpse of that today when better than expected earnings from the financials drove their stock prices higher. That's what I'm expecting.
And when we look ahead to earnings season here, which of course we're just starting to get into, what are you sort of most focused on? What do you think is going to be most important for investors to watch for?
Well, I actually thought today and tomorrow the financials would be most important, because to really get a sustainably strong bull market, it's very, very helpful to have a strong financial sector, and that's what we have for sure. I think we need to increasingly convince investors that even though valuations are high in the tech area, this is not going to be a repeat of the late 1990s and early 2000s. tech bubble followed by the tech wreck. I don't think that's what we're looking at. I think we're looking at earnings continuing to march higher for tech, communication services, industrials, because I think the U.S. economy is on course for a productivity boom based on the technologies that are available to accomplish that.
Ed, great to see you as always. Thanks so much.
It was a pleasure. Thank you.
You know, so they say these things that make you want to basically invest in the stock market. Now, one thing we do have to be careful is that this is mainstream media telling, "Hey, oh yeah, we're having a productive, GDP coming out." And guys, Wall Street understands that the blind lead the blind, and that the media is always focused on putting more money in the markets, putting more money in the markets, putting more money in the markets. The good. It doesn't matter if it's a left winger or right winger, because the hedge funds love the media space. The average American puts their money in the market only for it to be taken out because they listen to Bloomberg and Yahoo Finance and CNBC and all this stuff. Let me tell you, they're there to sell ad space. They're there to sell ad space. So the other thing is that I'm talking about the bond market. The bond market is nuts. So what's going to happen? I'm going to tell you what's really going to happen is everybody left the treasuries. Everybody left the 20-year treasury because they saw the stock market go up. Let me tell you what really happened. Everybody left the treasuries. They saw the stock market go up, and they're like, you know what? We're no longer going to be safe. We're not going to worry about, these wars and the funding of Ukraine. The market's going up. Joe Biden's doing his last push because he's going to win the election. The market's going up. We're getting out of treasuries and we're going into the stock market. We're going into NVIDIA. We're going to Amazon. We're going into the Magnificent Seven because this is where it's going. The Teslas is killing it. The bond market is bleeding right now. The inverted yield curves, right? The 5-year still paying high. Like, we haven't really uninvert that yet. And so we see the 20-year treasury just go down. It's going down like crazy. My TMF has been getting kicked in the arse, which is 3 times the leverage, right? So it went down to 38. Remember, I told you it could get down to 35, and I was happy at 50. And this thing went down, good gosh, another 25%. It is massive, massive bloodbath in the treasuries. But as we see more volatility, and there will be volatility, don't get me wrong, there will be some volatility. Right now, it's creeping back up to 15. It was at 19. It was at close to 20. Once we see that volatility, this puppy is going to skyrocket because everybody, what? They don't like comfort. They will go back to treasuries to protect their gains. And then you're going to see the prices of these bonds just skyrocket. On top of that, when they actually lower interest rates, again, effectively, and the interest rates, they were there just to appease the American consumer to think that they're lowering interest rates. But they didn't want to do it, the feds. They didn't want to do that. But when they actually organically lower these interest rates, you're going to see such a spike in that 20-year treasury where there will be no problem of uninverting the yield curve. And the prices of those bonds will just go up because the demand for treasuries are going to be skyrocketed, especially if there is a correction that I think a good 40 to 50% correction, possibly this year. You're going to see treasuries, just implode. So I still like the January 26 calls on this at 100. I really like that option trade if you know how to trade options. If not, give us a call. We want to help you with a strategy. Give us a call, 813-448-3446. We have great ideas, even when it's equities. Even if you just want to talk to somebody, let us be that voice for you. There are different colors of money, as you guys know. There's yellow money, there's smart money that's liquid, it's traded in the markets, limited risk. There's green money, money that is based on insurance contract that can guarantee your principal, that you can have access to the QQQs, that you can have access to the transition index, that you could literally grow your assets 15 to 25% a year, because it's 100% of the NASDAQ. It's 100% of these impeccable indices that just grow regardless of what the economy is doing. It has ability to transitions to commodities, to treasuries, to the NASDAQ, to the S&P. That's really all you need. Unless you want to go balls to the walls, high growth, then I would recommend, for information and education purposes only, I would obviously really be a big fan of the QQQs, because that's NASDAQ based. It is technology based. And 90% of the time when we are in a recession, it's always been technology and healthcare that takes us out of it because of the substantial growth. If you look at the historicals of America, this is what it is. So there's so much to talk about. I am just like a little kid in a candy store right now, because there's so much to talk about on what we will need to do. But more importantly, guys, I can bombard you with charts. I can bombard you with so many things, but you really have to give us a call. Give us a chance. We want to help you. I don't care where you're at. Give us a call, 813-448-3446. Our phone's been blowing up all year round, all Christmas, even in the new year. And guess what? I took the last 2 weeks off. I did nothing. I actually grew out a beard. I didn't shave for 2 weeks. It was hard for me to get back in the swing of thing. It was cold in Florida. And I just got like the spirit of laziness. I got out of my routine and it felt great. It just felt great to just be still in a moment and just kind of be in that off season of doing nothing. And so I appreciate you guys still following me. I appreciate you guys giving me some grace there. But this year, it's on and popping. There's some new ideas that are going to happen. We're going to talk about, my new partnerships, my new networks, new things that are happening, some great trades, so everybody can be informed on how to make some money. I'm just really thankful for everyone that has donated to Scriptures on Wall Street, has basically complimented us, that has given us feedback, that has shared our videos. Thank you so much. If you haven't had a chance, go to Rumble, check out our Scriptures on Wall Street on Rumble. I would really appreciate a like or subscribe. That way we can actually monetize the show. I think my Rumble account is at like $10, which I was so excited about. I was excited about like the first penny because we literally are starting this organically, and there's no one paying for this. It's all me. It's been me for 4 or 5 years, and now we're getting picked up by obviously Stu. We thank him. We're getting picked up by Frank Speech, Mike Lindell's network, and some other networks. So I really appreciate it. Just talking about the markets, and I'm really excited to just be a light to many confused investors as we move forward in 2025. Stay tuned. There's going to be a lot of content that I'm going to be breaking down. But before I do, wanted to talk about a really good book. It's called Husband After God. For those of you that are struggling with your marriage or struggling with your thoughts, or maybe you're just trying to show up differently, this is a great book. It really spoke to me. I just want to read one paragraph, which I thought was amazing. You have been entrusted with the heart of your wife, and Christ has asked you to lead her in a way. He leads his church. Jesus did not put himself above his disciples. Neither should you put yourself above your needs above your wife. The powerful example Jesus gave you through his action of washing his disciples' feet is an example of Jesus laying himself down for the welfare of his disciples. In the same way, you must bend your heart in humility and serve your wife faithfully. You are called to lead your wife like Jesus. Washing her feet means to care about her emotionally, mentally, and spiritual state. It means to help her in times of weakness. It means to carry her burdens so she knows she is not alone. And it means being there for her when life gets messy as you walk through life alongside of her. Marriage is an opportunity to trudge through the mirror with your wife, a journey that requires close contact. Serving your wife is done through sharing intentional words and intentional touch, both of which cultivate incredible intimacy. Embrace the responsibility of leading your wife. Take the example of Christ and be an example for her. Be obedient to the word of God as true spiritual leadership. I mean, this book is great. I haven't been the perfect husband. I've struggled with lust. I've struggled with infidelity. I've struggled with everything that a husband shouldn't be doing. And that's me. I'm guilty of it all. So I have to constantly put myself in the word, constantly ask my wife for forgiveness. And I have my own struggles, as you know. I am not perfect, folks. I am not perfect. So that's why I got this book, because my heart is to be closer, a husband role to be closer to God, so I can serve my family better. Anyways, I wanted to say thank you all for continuing to support Scriptures on Wall Street. We got some big plans for 2025, and may the good Lord bless you, keep you, and may his face shine upon you. I'm out of here.